Good afternoon, traders. Mark here from the day trading room. Time is 4:30. What comes to 4:30 London time? It's Thursday today, 24th of March. Let's run through the trades that I've done this morning and yesterday. Hope you're all having a good week so far. You might notice that I've decluttered a little bit my chart in front of me. This is the ES, by the way. Yeah, I've taken off some of the lines and I've put them onto another screen. I just felt a little bit as if it was cluttered, and if you watched the last video, a few warning signs cropping in of targets not being hit, entries okay, relying on entries too much perhaps, and not getting the final targets. I always look at these parameters. If I'm getting final targets, but my entries aren't so good, then I need to work on my tape reading a bit more and really be a bit more focused on that. But if my entries are great and my targets aren't being hit, I need to step back and look at the bigger picture a bit more. My entries are obviously fine. I'm getting the first scale or second scale, but I'm not reading it well enough to judge that complete move. That's either just not being in sync, or more than likely, I think really from the last video, it's the transition of crude oil from the real continuation that we had and the constant panic and the upside that just went on and on to the now more methodical market. So I've just decluttered a little bit. I've switched to a 5 minute from a 3, and I've changed the stochastics to match exactly what they would do with the 3 minute setting. So I just adjusted those there, and taken off the second the fast line or whatever the other line is. Just I'm using it. You've seen the videos. I don't use it very much, but I just like to see that I'm not chasing, or if I am chasing, I'm not going to be looking for anything major from it. And B, the primary reason is for that first pullback after the trend type scale. So that sort of thing there, from there back in on that. So that's that. Change a little bit to the filter system on the time and sales. This is all of them. This is the slightly filtered version. We'll see how well that goes. I'll put some feedback on that, and just change the VWAP to a dotted white, just to declutter a bit. Still at yesterday's close, high, low, and the open there. The overnight high and low I've now got on another chart, so that's easier to see. Let's run through today's while they're fresh in my mind. Trade on the S&P. I did yesterday as well. Trade the S&P. No real reason, more because the range is slightly lower. It's picked up a bit now. If we look at it, obviously the range has changed. But at the beginning of the day and yesterday, the range was slightly lower. So I'd rather try and work an order, a limit order, to try and maximise the profit. So the S&P is a better place for working an order. When the market's moving quickly, you don't need to. You can go straight in at the YM and be taking market at the market, and that's absolutely fine. But when it's a little bit quieter, I may go to the S&P. You've seen me do a few S&P trades. There's nothing. It's the same thing. It's just the same thing, really. Reading the market situation. Yeah, here we go. Market push lower. I missed this range fill. I was always about 3 ticks away from getting filled on the way down. I kept pulling the order down, and then I gave up on it when we got within a point of it, so left that there. We were consolidating around that, and I thought, we'd spent so much time here, the ticks are starting to push lower, that I'll take a little short. I don't mind taking a little short here, looking ultimately for the gap fill. There's plenty of downside availability there. It's shown weakness straight from the open. The opening drive was lower, a bit of consolidation as I said, but expecting a better further push. So I got the short there, got one scale off 94 and a quarter as we pushed off. I think the entry was half, 6.5, or was it 6.25? I think it was probably 6.25. Just double check the yeah, the high was 97, so it's probably the half or the quarter. Anyway, we pushed down, the first scale off there. I'm holding some, looking for the gap fill. It pushed up, and actually no, it wasn't. It was 97. The fill was at 97. I know because I had my stop at break even, and we missed it by a tick. Yeah, so that was just luck really, because I scaled out some there. We rolled back. I'd pulled my stop to break even. It went a quarter, nearly stopped me out, but it rolled over again. And this was a little bit frustrating. I had my order in at 92.5. A few traded there, but not enough. Family did actually trade there. 196. So that's the only thing with the S&P. If you're really spot on with your entries and exits, be prepared to to have a bit of pain on that. So yeah, I put it there thinking it's 2 ticks away from the gap fill. That'll be fine. As you see, it tagged it and then popped back up. Popped back up fine. I still think it's going to roll over one more time. Maybe after this tick pull back to zero. When it held for another couple of minutes, I just came out. So that was that trade. Um, Really, it was just disappointing. I didn't get that final gap fill there, but hey, that's the way it goes. Okay, let's whittle over to crude oil. Okay, crude oil. Two trades today. Oh, we can just see there's the entry there. A lovely entry here, 55 for me. Low was 4. Was a low on this 43, so that's not bad at all. Literally, because the trend is up. The trend is up. Has been. By the way, this is just pit hours up here. I've got the 24-hour another screen, but I've just put that to pit hours at the moment. So that's slightly different to my normal screen. But as I say, just decluttering a little bit, trying to look at the bigger picture. Anyway, bigger picture is uptrend. Been an uptrend. Every dip's been bought. We opened up below the 106, probed above it, started to push lower, but there was some good support there. Some good support there from pre-market. So I just want to see how it behaves down there. It started to push lower. It wasn't exactly accelerating. We're only talking 40 cents here, 40 ticks, and it wasn't solid candles, if you like. There's a lot of tail action going on. So when we sort of probed around here, pushed low and started to pull back, I thought I'll have a go. I'll have a go on the long side, looking for a push back up into this sort of level here, thinking perhaps we get to the 106, but also respecting the fact that we had pushed lower from the open, so we're not completely bullish and going to go straight off the bat with this like a bull in a china shop. So yeah, took the long there, 55, scaled some out from the usual. I think we got 12 ticks on that first scale. Stopped, tightened up a bit, then running the last, and couldn't look that spike without taking some off the table there. So that was the final exit on that. We then pushed on. We then took out the high. We then pulled back, and I quite liked that. I quite liked it. The fact that we had done a complete shuffle. We hadn't even rolled back over to retest. Let's get some drawing pens out. We haven't had a bit of drawing pen action for a while, have we? Because we got that straight move up and we didn't get a retest. To me, it's telling me, okay, the bulls are quite interested in this at the moment. They are quite interested, especially as the gap yesterday's close was around 105.75, which is about here. So there hasn't. It's pretty responsive. Pretty responsive, the buyers as we pushed under there. So I was quite happy to take that setup. We took out that little high, consolidated a little bit, saw a bit of a tape push in, and just closed it into some pushes up. Nothing fantastic. Just taking some off the table. I think my last exit was 30 on the dot, if I remember rightly. So yeah, around there the exit, but nevertheless a good trade. So let's look to yesterday. Just two trades for me yesterday. Had to go and leave the screens early. I left the screens at 4 p.m, so I only traded in the morning, which was fine. Worked out okay. Took the long here. We'd pushed up, we pulled back. This was the inventories. We had the oil inventories coming out 2:30 London time. They're normally 3:30, but there's a summertime discrepancy at the moment. And the premise was basically, if the oil inventories aren't poor and they haven't sold it, then to look for the resumption of the initial opening drive. So the opening drive was predominantly higher. We pushed higher. We couldn't get above that 106, but it was predominantly higher. We drifted lower over a longer time period. About 50% of that move. Something I look at just to judge, maybe not entries as such, just to judge to see who's in charge. That was about the 50%. Loitering around there. And a little bit of spiking as you normally get the inventories come out. After we realised that it was, there was nothing drastic, and it looked as if there weren't no surprises there. Then I took the long entry a little bit early. went against me in a little bit, not enough to stop me out. Fine, okay with that. Push back up quickly, which is good to see. If it goes against you and it comes back quickly and it's forming a tail, then you can be more confident and think, okay, well, if it does revisit that low, I will ditch it. Got the push up as usual. First impulse, I know I'll take some off the table. Second, as we pushed up to this high, good volume bar. I thought I'd take some more off the table there. Looking still for that break of the 106 level. That's the fundamental premise behind this. Looking for that to really blast through, maybe get 20 cents above that. We pushed up to 106. I held off. I thought we were going to have another go here. It still looks strong. The second go, when it pushed through by a few cents before coming back under, that's a big warning sign for me. So I'm out. I'm out of that contract. I don't. If it hasn't done it, then I'm definitely taking more off the table. I still had one left, but I'm definitely taking more off the table there. So yeah, that was that. Just under the 106, and got a low 90s on that, so not too bad. Then we rolled over. I'd held one, and I was really looking for a good push. I had my stop at break even, and unfortunately came down, stopped me out with this little bit of action down here. It did continue up, and we did get a little bit of a higher move, which is a shame. But I wasn't prepared to see that go against me. I didn't have that much conviction with it. Um, but I wanted to leave a trailer on in case we really picked up some steam. So that was the decision I made, and I left some on the table with that. But I wanted there was no more risk on that position. I'd taken 3 contracts off there with a nice profit on the majority or on the average profit. I had one left, and I was prepared to sacrifice that 50 cents or 45 cents or so for the opportunity to get another runner. So should I pull the stop up a little bit tighter? Possibly. It's something I need to look at actually. A couple of times there's been quite a good move in my direction. Has come back and stopped me out break even. It does seem a shame to leave some on the table like that, but at the same time, I want to give it room so that it can mature and try and get those bigger moves. But anyway, that was a good trade for me on oil. Another trade yesterday on the S&P. It was same sort of thing because the volatility was reasonably low. I just decided to use the S&P. No difference. The down most of the time they move in sync. Of course, I always use the Dow Cash. I do if you've been watching the videos. Look, even today bounced off that 12,100. It's probably why the S&P couldn't quite fill the gap. But yesterday, this is what we're talking about. Let's go back over. Here we can see I changed the colours slightly. You may notice I like to freshen things up now and then. Not changing obviously the fundamental things I'm looking at, but now and then change a few colours, scale back, make things easy to look at. It just keeps the game fresh, just keeps you alert, just keeps you, it's like painting your office wall or getting a new chair or doing something different, putting a new picture up. It just refreshes you and just keeps you, striving to get better. So what do we get here? Well, I just was watching this. We pushed up, filled the gap on the Dow, started to push lower, and just took a momentum trade really. We'd pushed through that low, pulled back. I saw that we'd just did one tick higher and then started going straight back under again. So I'm taking that short there. Got a nice fill, sat on the offer, and because it was loitering around there, I did manage to get the fill. Rolled over, closed that all out into new lows. Wasn't really 100% convinced on it. I just thought there's a little bit of overshoot from the 12k on the Dow. We pulled back up 12k on the dot. Anyone who's not watching the Dow Cash needs to be, really, in my opinion. I mean, obviously everyone does their own thing and some people are doing absolutely fine, but I really would recommend it because the amount of times it focuses on the whole numbers and stuff is interesting. So yeah, that was okay trade. Little scalp on that. Rolled up to the 12k, rolled back over, double bottomed, realizing now that they don't want to push this that much below 12k. Seeing the buyers step in, there's a nice low risk reward trade. There's my entry. Happy to take that. With a reasonable risk just below that low. A couple of ticks I'll be using the S&P so you don't get one ticked. And yeah, push up into the momentum. Quick 1 point off the table. 4 tick off the table, and let the other run. We pushed up, as soon as I see that high tick reading, highest tick reading of the day, not really any volume, I'm out with the rest of it. So that was the exit there, and I had to leave anyway around this time. So uh, yeah, great little trades, nothing spectacular. No 100 tick trades in it like we had a couple of days ago, or was it last week on oil? But we're putting profits in the bank, and that's the main thing. Um, Thanks for emails and questions as always. More than happy to answer any emails or questions or suggestions you may have. Keep an eye out for rescheduling the webinar. Um, that probably be in a couple of weeks' time. But I'll keep you posted on that. I won't. I'll give plenty of notice. I'm not going to just surprise anyone by giving it a couple of days' notice. I'll give a week's notice so that people who want to come can sign up. People who just want to ask some questions or whatever can do. So that's great. Good trading, guys. As always, what's the number one thing? Manage your risk. If you manage your risk, things will slot into place. It's so important. It's so important. Yeah, good trading. I'll be back with another video. I expect tomorrow or over the weekend. Okay. See you soon.